On today's episode, things seem to be staying consistent. We'll get into why and some of the things to look forward to in the coming weeks. Then we'll get a temperature check of the housing market this past week, as well as some key takeaways before we head into the weekend. Then I will have a Did You Know segment covering a very important mortgage topic for you. Let's get into it. Welcome to The Pulse and Perspective. I'm your host, Pete D'Angelo, branch manager for Rate. Excited now that we've got everything set. Stay tuned for more. Some more interviews are coming. I hope you all enjoyed the interview from last week. If you have anybody that you know locally here in North Jersey that has a story worth telling, please reach out. Wanted to start off with that today for you. Now let's take a look at the market, where things are at. Mortgage rates, we are staying relatively consistent. Looking back last week to this week, 30-year fixed rate is averaging in the high 6%, flirting with 7% a little bit. Saw a little bit of improvement on the adjustable rate mortgages, but overall, not a lot. We saw a momentary relief in the middle of the week, but looks like the market kind of moved up a little bit after that. What we should take from this is the situation is staying relatively consistent, which quite frankly is welcomed. We are not having to manage big swings right now, and the expectations really aren't in place for there to be much more movement on the interest rates as we move forward here in the short term at least. So speaking of which, let's take a look at what some of those important indicators are that influence mortgage rates. Starting off with our key economic indicators, the May CPI report came in at 2.4% price appreciation year over year. That was slightly softer than expected, and it went up 0.1% month over month. So inflation seems to be cooling a touch, or at least stabilizing based on the past few reports. Not a real cause for any expectation for the Federal Reserve to make any changes to their plan right now. Speaking of which, that brings us over to the labor market. Labor market is showing that jobs are cooling a little bit. 139,000 jobs added in May, and the participation rate went down 0.2%. Those are two small little movements downward to show some softening, but unemployment is staying at 4.2%. So again, no cause for the Fed to really adjust course and do anything to give us lower interest rates based on the data that we're currently receiving. So the Fed outlook for right now, they're meeting next week, June 17th to 18th. They're in their blackout period right now, so we will not have any headlines with anyone from the Federal Reserve making any comments. This normally creates an environment that's a little cooler like we've been seeing over the past week. There's no expectations for the Federal Reserve to cut their interest rates. When we know that that's the case, the most important thing for us to look at is what Fed Chair Jerome Powell says after the announcement of their interest rate policy. They're going to give us some insight as to where their head's at. That will help us to create some expectation, and I guarantee the market will have a reaction, and they'll be hanging on Fed Chair Jerome Powell's every word. Some of the external pressures that they are experiencing and that the economy is experiencing at large, tariffs, they're still a big part of the conversation right now. So as long as we still don't know and there's some uncertainty, people are going to clam up. We're going to see some more volatility in the markets that could make mortgage rates swing a little bit. These are things that go in that category of expecting the unexpected. There's really no anticipation. It could be a headline and then boom, there's a market reaction and rates shift, good or bad. What we need to see are the key things that we look at every week. What's the job market looking like? What's inflation looking like? GDP. What's the overall health of the economy? These are the important things. Everything else is noise, expectation, and anticipation. Now let's take a look at the housing market activity. So right now, active listings are up tremendously. They're up 31.5% year over year. That being said, which, by the way, 19 months straight of gains on active listings, which is excellent. We need to see this trend developing because inventory is so desperately needed. New listings are up 7.2% year over year, and the total homes for sale surpassed 1 million for the first time since 2019, the wintertime of 2019. That's great, but we're still about 14.4% below pre-pandemic numbers. So that 2017 to 2019 market environment, we're still underperforming that, but the good news is that gap is narrowing. What should that mean for us? That means that some softening should start occurring when it comes to home prices. If you're remotely interested in selling your home or getting pre-approved to purchase your first home, now would be a great time to do so. Because in the time where the market shifts is the most opportunity. When the market's shifting, a lot of people are not sure what to do. And if you are committed and you understand what your budget is, what your goals are for home ownership, you know what your goal is, what's important to you. And if you proceed just focusing on that, the market's going to do what it's going to do. You can just stay committed to the goal that you have to either sell and buy or to get pre-approved to buy. And as that market shifts, those who are sitting on the sidelines and uncertain, they're creating an opportunity for you. We know that the housing market's competitive, so this is a time of opportunity, I would say. It would be very prudent if you're remotely interested to proceed with that now while this market shift seems to be occurring. And because we've had so long of the market being in the environment that we've been in for the past couple of years with high inflation, high interest rates, well, I expect that this market shift is going to be a slow shift. So we're going to see this improvement on the inventory, but it's going to be slow. It's not going to boom, floodgates open, and now there's a ton of inventory. That may happen in other markets. Let me correct myself. This is really appropriate for the New York metro area and those hotter markets, Boston market, New York market, metro area, maybe even Chicago. Looking at these are the markets that shift will be very slow. So bear that in mind, take that into account, and understand that your commitment will wind up yielding much more positive results because others will not be in the game. Speaking of which, let's start talking about that. Let's dive a little bit more deeply into the buyer behavior that we're starting to see from the data, and I'll supplement with some of my experiences here in North Jersey. So first and foremost, many of the buyers are in that wait and see moment. A lot of the buyers are sitting on the sidelines, scoping it out and waiting, whether it's for an unrealistic interest rate or a realistic interest rate remains to be seen. They're not in the game right now, but there's still quite a lot of demand. So we're still seeing consistent activity in the market. As far as the market dynamics are concerned, the growing inventory and the flat sales may pressure home prices. And if that pressures home prices, that will give buyers some more opportunity for negotiation, and maybe even to scoop up a deal. The best advice I can give you is understanding what your affordability is and plan accordingly. That's what's going to separate you from the rest right now in this market. As far as what's next for the market and what we can expect to see. First, Federal Reserve. We're going to keep our eye on the ball with them. Next week, I'll be reporting out. Next week, I will be off. So the week after, we'll have about 2 weeks of catch up to do. It may be a little bit of a longer update. Stay tuned for more. But the next episode, I'll get into some more of the market reaction and what the Federal Reserve's commentary was on the market, expecting that they're not going to do anything with interest rates at next week's meeting. Other challenges. Second thing, there are still the challenges of the tariffs and government turmoil and chaos that seems to continue to happen. It doesn't take much. Just put on the news for about 5 minutes and you're bound to hear something about what I'll just call government dysfunction right now. So that is, again, creating an environment for people to feel uncertain. And when people are uncertain, things get a little bit more volatile. The market outlook for the summer is really going to hinge on what is going to happen with inventory and interest rates. It's no longer a conversation now just about interest rates. It's really about the inventory and the interest rates and how many people are going to be in that position where maybe their life circumstances have pushed them to the point where now they need to sell, and that creates more inventory, but that also creates another buyer in the market. And then proceeding from there to see what would be available. So far, the spring has started off pretty strong. for the most part, with a slow start in April due to all the tariff conversation that had people a little bit shelled up, I'd say. But come May, things kind of opened up a bit, and we're seeing that consistency going through into June now. Here are some key takeaways for you if you are a prospective buyer. I'm beating a dead horse, but it's really important. Go and get pre-approved now and get that numbers situation in order, get your finances in order, and understand what is going to work best for you. You can reach out to me. Love to have a conversation and see what I can do to help you. For the current homeowners, you may be in the perfect place, and if you are, that's great. If you are not, there's opportunities right now with interest rates stabilizing. You don't know that you can really kick yourself seeing news of rates dropping if you were to take out equity in your home, things along those lines. That's completely up to you. But this is a good environment to start exploring those options if you need, and if you would like to possibly purchase your next home to upsize, downsize, lateral shift into another area. Now is a great time, especially if you're going to move out of a hot market. If you're in New Jersey and you want to move out to Pennsylvania or maybe down south, South Carolina, some of these other markets have a lot of inventory. Negotiations are occurring when you're placing bids. And yeah, I actually assisted a client that placed a bid under asking, and they won and they purchased the home. That's what it's like, and that's what's starting to develop in other markets. So if you are a current homeowner, bear that in mind. For real estate professionals, education is going to be key. Things are very uncertain. We don't need to anticipate. We don't need to forecast anything. We just need to ensure that we are providing our clients with the proper context for what is going to be best for them. So education is still going to be paramount, making sure that they stay updated on what's going on in your local markets. My final note on all of this is that patience and persistence is going to be your keys to success. Whether you're a prospective home buyer, prospective seller, real estate professional, anyone generally involved in real estate, those are going to be your key recipe ingredients for success in this market. That is it for my show today. I hope you guys enjoyed this information. I hope you found it helpful and useful. I will be taking next week off as I buried the lead before. I'll be actually going out to enjoy a baby moon with my wife as we are expecting the arrival of our daughter in August. So spending some quality time with her, but still going to look forward to coming back and providing you with the latest and greatest the following week with a weekly update. I expect quite a bit can occur in those 2 weeks that we'll be off here. In the meantime, if there's anything you'd like me to cover on the show, or if you have any questions about what was covered, please feel free to reach out to me. All of my contact information is below in the description. Otherwise, I'll look forward to catching up with you all next episode. Have a great rest of your day and take good care.